I'm trying out new software, so can you tell?
Not really.
No, you can't. Well, so I gotta go right on YouTube and Facebook individually now to see the chats.
Oh, well, is
Hmm.
that good or bad? Because that seems like it's more work for you.
It is gonna be more work, but it's fine. And it's gonna be a little laggy too, but that's perfectly fine also.
How's the weather where you're at right now?
It's like, dude, my blinds were shaking from the wind.
My window is sound. You can hear it.
I can't hear it, but can you hear mine? Earlier when I was
No,
on the phone? No, you couldn't hear it?
no, I couldn't hear it. I'm just like, because you know how like last time you were saying how you can hear the car driving around
Yeah.
because your headphone is so clear. So I was just wondering, and I was like, oh my gosh, this is so crazy. So Smud just pinged us during the time you were having that conversation.
Uh-huh.
So I'm hoping we still have internet.
Oh yeah, I know. I got a notification earlier that from Ring that my area, some neighbors, some blocks are have no power.
Oh man.
Yeah, so like just letting everybody know right now that's watching. If we accidentally log out, it wasn't intentional, okay?
No worries.
It's because the thunderstorm that's going on right now in Sacramento and El Grove, we're probably gonna get power cut off pretty soon. So just FYI, y'all.
Yep.
Yeah. But man, okay, so today we got some exciting stuff to share with all you guys. Yeah, I kind of, but of course, before all of that, I want to kind of do a market update since it's been a while. One of you guys reached out to us and said, "When's the next market update?" Lisa, you know who it is, right?
Yep. Yep.
Yeah, we're getting there, I promise. It's just been such a hectic month, with a lot of stuff going on. But let me share my screen so that way I could go over with you guys market update. But how you been,
I've been
Lisa?
good. How have you been, bro? Sorry, it's been crazy with this. When these programs roll out, I'm like swamped and everything like that. So I do want to talk to you what you asked me about earlier, but when we have time.
Yeah, for sure. No, no, no. I think that'd be good. I think that'll be good. Okay, I need to. Okay, let me share my screen. Okay. Okay, there it is. All right. Hopefully everybody sees that. Sorry, you guys. If we're acting kind of slow today, is because we're using new software and it's very different. Okay, so I gotta change this. I gotta go over to. Oh, I like how we did this. Okay, let me go SAC. Let me go SAC County. Just give me a minute.
I want to see if truly there is going to might be more inventory coming out. It's so crazy.
More inventory. I'm sure. Okay, SAC County weekly. Okay, I hope you guys missed this chart because I do. Well, I look at it every day. Oh man, look at that, Lisa.
Oh my goodness.
Look at all the inventory going down. So, inventory went down like 3% from last week. But if you guys look right here, for the past month, it's been trending down, y'all. And look, new listings is up from last week, 15%, which is good. But if you look at the overall blue line, okay, the blue line indicates the new listings. It's very steady. See that? It's very steady. Pendings are very steady. Sold homes are pretty steady. Look at that dark green tab right here. It's pretty steady. So, like, these are the stats right here. Weekly, 15% new listings, sold homes, 18%, pending, 8% from last week. So, this is just week over week. If you guys go month over previous month, it's this. Inventory went down from last month 17%, Lisa. New listings
Wow.
down almost 12 from last month. Sold homes went up 10% from last month. Pending is up a percent. And look, last year, man, around this time we had less inventory than last year.
Yeah.
Less homes entering the market, less homes sold, less homes being pending. Everything is less compared to last year. Man, that's kind of scary, y'all. If this continues to happen, it's gonna become a buyer's market again. If inventory continues to go downhill like this. Let me go on the average price per square foot. See, it's pretty steady week over week, 300K, 315, 320. It's steady, like 1% change from last week. Last month it actually went up 3%, but from last year it went down almost 3%. I mean, almost 10%. Price per square foot. Days on the market. Okay. 56 days on the market on average. See, it's pretty steady. 40 to 56 days on average that it takes for a home to sell right now. Yeah, see, it hasn't changed one bit from last week. From last month, homes are on the market longer now by 12%. From last year, look, last year when homes were on the market 16 days on average, Lisa. Remember those days?
Wow. I remember those days. It was like, I don't know, yesterday, because it was like 2 years ago, not even that.
Yeah, for reals. Man, now it's 53 days on average compared to 16 days. See, and look, like the percentage of sellers getting what they're asking for is still slightly high, It's there's not a lot of low balls going on as long as the sellers are listing their
Yeah.
home correctly. It's 97% of sellers out there. They're getting what they're asking for. I mean, compared to
Yeah.
last year, you know, a, 104% was getting more than what they were asking for. Um, but then like 97%, that's still slightly very good. That means people are still buying. Sellers are still getting what they're asking for. So if you're a seller, it's not all bad news. Yeah, it's gonna stay a little bit longer on the market, but if you anticipate that, you market right, you price it right, you shouldn't have an issue getting what you're asking for.
Not at all. And when I'm looking at this, Chia, what I'm seeing is like I hear a lot of times where people are pulling listings off because it's not selling. You're only 3% of the that pool. So if
Hmm.
you're missing out on that, that's a huge step that's being missed.
Yeah. No, that's exactly what it is. Listen to your agents, y'all, okay? If you guys are putting your home on the market, listen to your agents. That's all I would say. Okay, let's go to average price sold. There you go. It's still pretty steady, you know. Like even though this green light is kind of trending up, you gotta pay attention to the red line because that's the sold price. Okay, and I mean it's zigzagging up and down, but this is a week by week. But if you put it on a monthly basis, it's pretty steady. It's still in the 500K range. So look, barely a 1% change in active. Sold price went down week over week, 1%, but month over month. Look right here. This is what I'm talking about. Micro versus macro data. Price went up almost 10% from last month. Sold price went up a little bit, but it did go up. Uh, look, active price compared to last year went up 8%. Wow. Sold price though, look, sold price went down 16% compared to last year, Lisa.
Wow.
So you know what I see when you know what I think when I see this, Lisa?
Huh.
The fact
What's that?
that the fact that the average active price is higher than last year by 8% is telling me this. Sellers are still conditioned to last year. Sellers still think that they could get a lot of money for their home, and so they put it on the market for higher than what they think the home is worth, and that's why you see this. But in reality, it actually sells for this. You see that? Active is 742, sold is 512.
Wow. I
That's
mean,
the
that's still a
reality.
pretty darn high. It's still a pretty darn high number. But again, if you're not pricing it out right, you're part of that very small pool that's missing out. And if you're going to miss out on tier number two, or you're going to miss out on tier number three, but I don't know with the limited inventory that's going on right now. Chia, you would know best, but it's crazy.
Yeah, it is. Yeah, me looking at this, it's just kind of like, man, you can't go wrong with data, you know. If you look at the data, you can't just pick and choose what you should or should not get for your home. The data's right there, you know. So
Yeah.
that's how I feel. So of course it's still pretty steady. Earlier I had a conversation with a client of mine, and they were asking me, "Is it a good time to buy?" And they're like, "You guys know how I feel about that question. You know, everybody's situation is different," and that's what I told them. And like, even though rates are gonna go up, which we're gonna talk more about, you know, Lisa is
Yeah.
gonna talk more about later, prices are still pretty steady. You know, like what you guys see here is gonna go up, it's gonna go down, it's gonna go up, it's gonna go down. It's still pretty steady to where affordability is still a question right
Yeah.
now. Okay, but of course we're getting there. You know, we're getting there. But just so y'all know, if you guys are in a position to buy, like, don't don't pick up pennies over dollars is what I would say, because home
Right.
ownership, the opportunity, the equity build while you're in the home, the potential for it to refinance once the rates do go down later, you know, you have options to choose from. And don't tell yourself a year from now, if you're in that situation, man, I should have bought when the rates were 5.5%. I should have bought when it was 7%. Because what is next year? It's 10%. What
Uh
is,
huh.
gosh, I can't
It's kind
even.
of crazy the way it's going right now. My goodness.
Yeah.
I mean, this time last year, people were freaking out because it's starting to get into the threes.
Mm-hmm.
Um,
Yep.
so I mean, it's more than doubled.
I know. I remember when it first went up to high threes, low fours. Everybody was calling us saying, "Oh my God, rates are so high right now. What am I gonna do? I'm not gonna buy anymore." And then, boom, it's at 7% now. So this is a month's worth of inventory, y'all. Look, we went below 2 months now. See that? So we were going towards a steady market, but then like now we're going more back towards a seller's market, according to this. Okay. And if this continues to be the trend to where there's less inventory, like over here where it's point 0.6, point 0.9, then prices are gonna keep going up.
Yeah.
Because you know why? No inventory, but
Mm-hmm.
more buyers, more demand. So I mean, hopefully we don't get back to that. But if this is a trend, that's what's gonna happen. Look, just from last month, it changed 34%. From last year, it changed 31%. It went up 31%. Man, this is the data, y'all. This is the data.
I love
And that's
looking at this.
you love looking at this?
It's
Why is
just because
that?
it's always good to know where we're standing, where our business is, and everything like that, and how we can help people. Because people, what's the crystal ball question that we get asked all the time, Tia? Is now is a good time to buy, right?
Always.
So I love looking at data because it's not emotional. It's not it is. So you got to look at what the market's doing, what's going on with your situation, your rent, and everything like that. Because again, interest rates rise, loans are going to be more expensive, especially if investors are coming on in and buying some of these properties as well. Their interest rate is high too, which means they have to raise the rent.
Hmm.
That.
Yeah, it's gonna be a domino effect. Everybody's
Mm-hmm.
gonna start feeling the pain of inflation, the pain of
Mm-hmm.
prices, being adjusted. And that was one thing I forgot to tell the client earlier, Lisa, was even though prices are going up, and I mean, even though rates are going up, rents are going up.
Yeah,
So, like, I mean, you just gotta pick your poison at that point, right? Which is,
absolutely.
but yeah, you just gotta bite the bullet and pick your poison at when that happens. So, that's what I would say. And then, shoot, what's next on the agenda? Lisa's gonna be chatting with all you guys all night now. Did you want to share your screen?
Absolutely. So
I
I got a
think I
couple
think we're
things.
gonna save the down payment assistance program towards the end.
Okay,
But
that's
we could
totally
talk
fine.
more about rates. We could talk more about um, the MI, the changes to
Absolutely.
that for FHA because that's huge too.
Absolutely, you guys. So I'm going to go ahead and share my screen. Okay. So this is a consumer website, guys. Okay, you guys can all utilize this as well. This is what the average is for all over California right now, guys. 30-year fix is at 7% already. Okay, even a 15 years at 6.45. Jumbo's not, roughly in between that. An arm, as you can see, it's not much different either. Okay,
Yeah, it's not even
FHA
worth
is
it.
already hedging at 6.5. All right. VA is 6.52 right now. Okay. That's on the average across the board. All right. And I know that sounds a little bit heavy and everything like that, but at the same token, I will show you guys in a little bit of what it costs you to rent and what it costs you to still buy, even with these rates like this. Because remember, it doesn't matter what these numbers are. If you're renting, it's 100% interest, guys. You'll never get any of that back. Okay. So I'm going to go ahead and move over to the FHA comparison. Okay, guys? As of the 20th of this month, if you have loans that are coming in right now, okay, um, as long as it closes, this will reflect, which means the mortgage insurance right now, if you're putting less than 10% down on an FHA loan, okay, it's 0.85%, which means it's $512.66 if you're purchasing a home for $750. Okay, I did it as a large so that you can see the comparison a little bit better. Okay, and it's going to go down to 0.55. Okay, let me go ahead
Man,
and do that. Okay, our interest rate right now is actually at 6.25, so it's slightly better than the average right now, which is wonderful. Okay, it's going to be 130, almost $137 annually. It's about 1637 almost. Okay, and the life of the loan, you're saving 49,000. So a little bit definitely counts. Where this makes a more of a difference, you guys, because the interest rates are rising, that difference in $136.37 may actually help your debt to income ratio. Okay, this part right here, I priced it out differently for this, for the purpose of you guys just seeing what it would be if it was 700. Okay, if it was 500, okay, let's go ahead and see how that looks like. Okay,
Lisa, before you start with the 500, can you explain what MI is to a lot of individuals that don't know what it is?
absolutely, guys. So mortgage insurance, okay, is basically if you're putting less than 20% down, then the mortgage insurance doesn't secure you guys. Home insurance, which is also hazard insurance, you for fire damage, theft, things like that, okay? But mortgage insurance protects the bank. So they're saying, hey, since we're putting the bulk of the skin in the game to get you into this house, we want you to purchase mortgage insurance to help us out, okay? Kind of like I scratch your back, you scratch mine. If for any reason you can't make these payments anymore and the house goes into foreclosure, that mortgage insurance protects the bank on your loan, okay? Now, mortgage insurance is also on
Very
conventional
good.
loans, but conventional, this hasn't changed much. Okay, guys? Um, for conventional, mortgage insurance is really on your credit, whereas FHA is a lot more friendly when it comes to your credit. And mortgage insurance
Hmm.
is also upfront for FHA loans. It's 1.75. This amount you don't have to pay upfront. It gets tied into your loan. So here you actually see the true loan amount and also the base loan amount. Okay.
Got
It
it.
gets all tied into here. And for FHA, if you put less than 10% down, this stays with the life of the loan. Okay. This is what it's going to help you monthly. On this basis, it'll help you with almost $91 a month if it was a purchase price. Okay? On an annual basis, $1,091. Life of the loan, almost 33,000. Okay, guys? So it does help. It can get you there. The debt to income ratio, the higher the loan amount, the more the debt to income ratio is going to affect it. So most of the time, this change is going to help increase purchasing power for people a little bit more, or at least it'll curb the interest rate hike.
Trust me, right now in this kind of market, a little bit for the
A
same
little bit
amount,
helps. Every
a
little
little
bit will
bit
help.
helps. Gosh, it
Yeah.
helps so much. So that is so big. And that's just one thing that, they're doing right now to sort of find opportunities for individual homeowners, I mean buyers to become homeowners. So we'll see where it takes the market, right, Lisa?
Oh yeah. Oh
and
yeah.
then
Let's hope it
and
helps a little bit more, and maybe they'll drop it a little bit more, because this is a really good win for FHA buyers. So for those of you who are like, oh man, I just closed my FHA loan, then what? Okay, can I refinance? There is such thing as a streamlined refinance, but right now, if you got it, the interest rates have been rising the last several weeks.
yeah.
So if you just got a home loan, most likely if you refinance, that a few $100s is probably going to be offset by the higher interest rate that it is now anyway. So I would say, keep a pulse on it. Whoever you're working with and everything like that, make sure that they're helping you, monitoring the market and everything. And when it's feasible and financially sensible for you to refinance, then absolutely that could help too.
Yep, that's what I would recommend too. You, I think that's a good segue for the down payment assistance.
Okay. Well, awesome, guys. I mean, I'm enjoying this. There's a new down payment assistance coming out on the 27th of March. Okay.
Mm,
It is called, let me actually share my screen with you again. Okay. All right. It's the California Housing Finance. This is also a CalHFA, guys. It's called the Dream for All Shared Appreciation Loan. Okay. And what this means is that this program, instead of the regular CalHFA loans that allow you the FHA or the conventional for 3% and 3.5%, you are allowed, they're giving you up to 20%. This is huge, guys. From 3% to 20% is a huge difference. Now I can't click on this right now. Actually, let me show you. I'll open the CalHFA True website.
Question, Lisa, about that
Yeah.
20%.
Mm-hmm.
Can you, what can you use that 20% for? Just closing
So
costs?
no, it's not a closing cost. It's only the down payment. So we'll get to
Only
that
the
in
down
just
payment.
yeah, only down payment.
Okay.
Okay. So let me go ahead and see where the bulletin is. Looks like huh, they moved it. Okay, sorry guys.
All good.
Let me see here. Here we go. Program bulletin. Okay. So in here, if you're buying in Sacramento, this is great for Sacramento because look at that, guys. The income limit here is 202,000.
Mm.
Many of us will qualify for this. Okay. All right.
Did they increase that limit, that income limit?
They did, but they increased it not this year. They increased it quite a while ago, actually.
Okay.
This is for CalHFA. The equity forgivable loan was a totally different one. Even though it
Yeah.
was CalHFA, there was a different set of income limit. So that's why there was such a huge difference.
Got it.
Okay. So again, this is not forgivable. Okay, guys, it does allow you to borrow up to 20%. So here's the thing. If you have 5%, 10%, not the full 20%, you actually can borrow the additional 20% from this program and put in an additional 10% yourself. The combined loan to value of the sale of the house, okay, 70%.
I see.
I'll work the numbers for you guys in a little bit, but I just wanted to share with you these highlights. Also, just wanted to let you guys know I did call into CalHFA to get more updates, but unfortunately, they don't have any themselves. They're still working out the kinks.
Mm.
So this might actually change. This is only based on what we know about this program now. Okay. So in
It's
the
not a
other combination,
unicorn. It's not a unicorn loan then, right?
no, it's not. This is the beauty of this program. It's actually not a unicorn loan, and it can be very, very, very beneficial to many of you guys out there who feel like, oh my gosh, I feel like I'm saving money, but I can't catch up to the rates and I can't catch up to the house that keeps changing. This is a game changer, guys. Okay. I'm really excited to share this one with you guys because it doesn't allow you, cannot be combined with the Cal Plus, which is the one that helps with closing. Honestly, guys, you're giving up pennies to earn 20%. Okay. The
Yeah.
Cal Plus in the My Home is 3 or 3.5% plus a 3% closing cost difference. So that's like 6 to 6.5%. You're getting a whopping 20%. Okay.
Yeah.
So the way that this program works, okay, is that you do have to pay back the original loan amount when you refinance or when you sell your property. What does that mean? Okay. Chia, is this big enough on your screen?
Yeah, it is.
Okay, great. So if you purchase a house for 500,000, basically there's three loans on this, and usually for CalHFA loans there is three. Okay, guys.
Hmm.
The main loan is at 400,000. The second loan is at 100,000, which is the 20% that they're letting you borrow. Okay. Let's say 5 years down the line, your house is now worth 640,000, which means 640,000 and 500,000. The difference is 140,000. Okay. You do also have to pay the original loan amount back plus 20% of any appreciation in the value of the home. So if the
Mm.
appreciation is 140%, 20% of that 140 is 28,000. So you have to pay back the 100,000, you have to pay back the 28,000. So
I
before you
see.
say, "Oh, that doesn't seem so great." I actually created a chart for you guys so that you can see yourself, okay, how these numbers actually look like. All right? So,
Yay.
is this seeable, guys? Is this big enough?
Yeah, that's good.
Okay, great. So the county loan limit in Sacramento right now is 763,600. Okay, guys, this is a huge, huge thing. It changed every year, and this will absolutely increase your purchasing power. Just so that you guys know, I have the income in here. If you're making 25 bucks an hour, each of you guys, okay, that's this household income. So you're still the gross annual income is a little shy of 104. You're still very, very qualifiable, no debts and everything. I can plug that in for anybody that wants me to do it for you guys later on. But for this sake, there's no debt. Okay. This is the income and same scenario as what they have as an example. Okay. I'm going to share with you guys. Okay. Well, what if the difference between somebody borrowing the whole 20% versus somebody that actually has that 20%, why would you use one over the other? Okay. So I'm going to go down with this amount. So the 20% is what they're assisting you with. Okay. Now, there is no interest rate written on their website just yet. When I called in, they said they don't know. The other programs, the interest rate is actually the same as what it's going for right now. So they did tell me the likelihood of the interest rate going to be higher is much higher because, again, they're giving you guys 20%, right? So that makes sense. So I'm cushioning that it might be about 0.5% higher than normal rate. Okay, so 0.5%
Mm.
higher from the normal rate that we have right now at 6.875 is at 7.375. Okay, so the difference between a regular program and this down payment assistance program is about $135 a month. Okay, guys. Now, because it is a down payment assistance program, there is going to be a higher closing cost. Okay, that's just the way that it is on these programs, which means closing costs is close to 19,000, whereas this program closing costs is a little shy of 11,000. Now, just so that you guys know, okay, all these fees that are listed out and everything like that, you as the buyer don't choose who the title and escrow company is. It's the seller. So I usually cushion it a little bit higher, and I usually position it for you guys so that you guys have ammunition when you guys are caught in a situation where the seller has to choose 10 other people. You can say, hey, Mr. Seller, I really love your house and I love your house so much that I'm willing to pay my closing costs and your closing costs. Okay. Worst case scenario, even if you have to put that on the table, think about it, guys. Okay. The bank is pretty much giving you $500,000 and they're only asking you to come in with 19,000 basically. I think that's still a pretty darn good deal. Don't you, Chia?
It's better than nothing, honestly. And like right now,
Exactly.
like right now,
Exactly.
everybody's penny pitching right now. Because when you get the
Mm-hmm.
home, you still have to fill it up.
Correct.
You still have to go buy
Correct.
your appliances, your furnitures, and etc. You gotta move, do all of that.
Mm-hmm. Yeah, absolutely. So here's where the fun part comes in, guys, where you're asking, oh man, I technically have three loans. Do I have anything left? So selling it for 640. Okay, guys, this is the original purchase price. This is that equity built here. So because, okay, assuming that you're gonna sell it in 5 years, in the first 5 years, you're basically paying mostly to interest. So even though your loan starts at 400, it didn't go down a whole lot. Okay. So this is how much that amortization looks like on that first loan. So you're going to have to pay that back after you sell. Then you pay that $100,000 that they lent you initially. Okay. Plus that 20% equity share that they're talking about. And guys, keep in
Mm.
mind too, they don't know if they're going to actually put an interest rate on this $100,000. So if it's
Oh.
like any other Calhafa and it increases to 3%, okay, then you're gonna have to pay back 115. But let's just assume that they're gonna be super duper nice and there's no interest on that. Okay.
Yeah, I like
This
that
is
better
typical
too.
agent fee to sell your house and everything, normal closing costs and everything like that. Your net proceeds is $90,603.35.
Oh, it's not
This was
bad.
your initial cost, guys. If your initial cost is less than $19,000 and you earn in 5 years almost $72,000 and you're profiting over 380%, who's going to say no to that?
Yeah, it's not bad.
I wish I
And
was a first time buyer so I can take advantage of this. Shoot.
for those, and like at the end of the day, a lot of buyers maybe they might not sell in 5 years. Maybe they might stay there forever. This is such a
Yes.
good opportunity to get in the door, especially with prices everywhere going up due to inflation, all that. Like man, like I went to the grocery store the other day and bought a case of eggs, and I didn't realize how expensive the eggs is right now. So like anything helps right now. The mortgage
It does.
insurance being reduced for FHA, and this 20% is a lot of money, y'all. And a lot of first time
Yeah,
home buyers
20% is a
don't
really good amount.
have 20%. A lot of first time home buyers use 3%. 5%, 1%. So like for you to get in the door and get 20%, man, that is pretty huge. I feel like when this program comes out, you say on the 27th,
Mm-hmm.
there's gonna be there's gonna be like a there's gonna be a limit, huh? Like it's gonna be
There's gonna be a
basically first come
line,
first
Chia.
serve. It's gonna be a
There's gonna be a
line.
line. But here's where I like about this program, okay? Because the equity for Big Givable, it was out like for 7 months, okay, and that was it. There wasn't enough money because when you pump out money and you don't have a way to bring that back, it's going to be much harder to fund those types of programs because it's forgivable, right? You
Mm,
don't have to pay it back. So if you don't pay it back, how do you pay it forward? This is kind of like a pay it
of
forward
course.
type of situation. Don't be so stuck on the equity share payoff portion, okay, guys? Because think about it. If you're paying that portion back and you're paying a little bit extra for that portion, guess what? That money gets to go back into the program so somebody else can utilize it.
That is how
Okay?
these programs are worked.
Yeah. And then that way it can continue that for everybody. And it's an equal opportunity for basically all first time buyers. Okay. So I'm
I
going to
would
show you
do
guys.
this
Mhm.
over renting.
Well, I'm going to show you because I have a little rental chart right here. So if you guys are asking
Oh,
yourself that
okay.
question, yeah, I, we get asked that so many times. I want to share with you. Okay. On the regular resale price. Okay. So what would be the difference? Then why wouldn't anybody, even though they have 20%, why wouldn't they use this program? You absolutely could, you guys. You absolutely could. Okay. But here's what you're leaving on the table. So these are the pros and cons. Same situation, there's only one loan to pay off instead of the other two, okay? Which means now you're netting 200 and almost $230,000 versus this right here of almost 91,000, okay? But keep in mind, your initial cost was a lot higher too. Your initial 110,792 and 33 cents, okay? At the end of the day, you see where the percentage profit
Yep.
is 380% because you put so little in here. This one, your profit is almost 108%. Again, that's not a terrible thing, okay,
Yeah,
guys? When
it's
you're
not.
when you're earning that much in such a short amount of time, okay? The difference in dollar though, okay? If you had the money in 5 years, you're also leaving this much money on the table. So you got to ask yourself, ooh, okay, do I want to put all my eggs in my one basket? And do I want to utilize this program and leave almost 47,460 on the table, or do I just want to do it the regular way and earn as much as I want to, right? So that's two ways to take a look at that. There's no right or wrong, you guys. Your circumstances, sometimes you don't get to choose between good or bad. You have to choose between bad or worse, right? So here's what I want to share with you guys. The average rent right now is roughly about 2,500. Okay, so you're asking yourself, this money, you see, doesn't matter what your mortgage is, you're getting it back, guys. You're getting back. This money, you've
And
a month, you're paying 30. And in that 5 years that you've accumulated as a homeowner, you just paid somebody else $150,000.
you
If I
got
was a
it.
landlord, thank you so very much, guys. Thank you so very much for that.
That is the sad
Is
truth.
that the eye opener or what?
That is the sad truth. You know, people don't realize that until they look back 5 years.
Right,
And I think that's why this is a good opportunity because programs like this don't come out every day.
right, right.
And I know it's not gonna last long. Like probably I give it 6 months. It'll probably be gone. Maybe
This
even
program,
less. Maybe even
I hope
less.
not, because Cal has been around for a really long time. That pumps it back to the consumers. Now, they're not going to get that back right away. So I see where you're getting at with Chia, because it's like, okay, well, these people are going to hold on to this. They're not going to pay it back until it's financially, sensible for them to pay that back.
Right.
Right? That makes total sense. So there is a possibility. So yeah, jump on it while it's still hot, you guys. Last
And this is
one.
not and this is not like area contingent, right? To where
No, it's
you
not.
to
It's
where
all of
yeah.
California. So all
Yeah,
of you
so
guys
that's
who are
awesome.
moving out of California, no, you don't get this. But all of you guys that are staying in California, you absolutely do. And I want to share with you couple more numbers, okay? If that's okay, Chia.
Yeah, go for it. All
So
you.
here's the thing, guys. The difference between the mortgage, because a lot of times you're like saying, "Oh man, I'm paying only 2,500, but now I'm getting a mortgage and it's gonna cost me a little bit more." Yeah. So what if I put it in here to make it a little bit more easy? So either way, you're gonna be spending either 2,500 or 3,400 for a mortgage or for rent. Okay. So this is the difference. The difference between 3,360 and 2,500 in 5 years when you sell. So really, truly, this is the true cost, right? Even if it's the true cost and you are paying into that mortgage, okay, I cannot include that 25 because it doesn't matter. You're going to lose that anyway. At least you're going to get something back, even though you're paying a mortgage. It's not as big as the other number, but it's still more than not getting anything back at all.
Yep.
Same thing here. Okay, guys? Now, here is where it gets a little bit tricky. It's a little bit more lucrative. This program is great when you are trying to sell in 5 years. How does it look like for refinance? It's not as pretty, okay, guys? So I wanted you guys to see this. So this is the program. This is the regular conventional. So in 5 years, okay, it's going to take about that time for 100 to 140,000. Okay, guys. So if that is the case and interest rate goes down, okay, when you refinance, in order for you not to have that mortgage insurance that we talked about, you're gonna have to keep 20% in your home. Okay, so 20% now is kept in the home. Okay, even if interest rates go down to a whopping 5%, guys. Okay, you're at 7.375 here, and even it goes down to 5%. It seems super attractive, right? But remember, even when you refinance, you're going to have to pay back the first loan. You're going to have to pay back
Hmm.
the second and the third, which is combined into here. So your total amount to pay off is a little over 515,000. Okay, which means you're going to have to put in about $3,500 just to refinance. But even if you refinance, you're only saving $14.17 a month,
Yeah.
which means you're saving $170.09. Life of the loan, you're saving $5,102.60. But guys, you guys have already paid into this house for all of those monthly payments. This monthly payment accumulated in 5 years is $165,762. So in actuality, if you refinance, you're losing 166,000 and some change. Okay. So if you're thinking, oh, I'll just get this program and refinance later on, refinance might not make sense if you still have this program, guys. Okay. When,
Mm.
well, let's see. Let's see, when does it make sense? Okay. All right. 4% is looking a little bit more attractive now. Let's see, we can get anywhere with 3.5%. Okay. We're still in the red. So if it gets back to where it was how the during the pandemic was, okay, we can see this happening, guys. It might work. Okay. Keep in mind though, let's just say for instance, if it's the interest rate falls to 3% in a year, okay, the chances of you increasing in equity by 140,000 in 1 year is not as likely either. So all of this has to be in play. Either that, you are going to have to pay back a little bit more of what you borrowed during this CalHFA program in order to take advantage of that. Okay. And then on the regular side, okay, guys, because you already put your own 20% down, it probably won't not even take a year, probably take less than that for you to accumulate a little bit more. Okay. So you can truly refinance. Okay. If it's at 5% at that time, you're saving $563.88 on this. So apples to apples, if you put in your own money, you have a better chance if you're deciding, okay, I want to refinance. Okay. You're actually saving at the life of your loan, okay, $164,649.78. That is a really, really good refinance. And do you have to wait until it gets to 5%? Not necessarily. What if it goes down to 6% again? It goes down to 6%. You're still saving over $300 a month, almost 72,000 in the life of the loan. Well, okay, what if I want to shorten my loan? Okay, let's see how that looks like. Let's do a 25 years. In that situation, you're still saving $123.64. You're saving a little bit less, but because you just decreased the life of your loan by another 4 years, okay, this is how much you'll be saving at
Mm.
that amount. So I love to show you guys these charts. I love seeing charts because, again, these are numbers. Don't listen to me and Chia. Don't listen to anybody. Just follow the numbers and see, does this make sense for you guys? Okay.
Yeah, like what Lisa said, like these programs are there as an opportunity if you want to utilize it. You don't have to utilize it. If you have the money, use your own money. Of course, it's going to be more money upfront, like what Lisa mentioned, but you know, your the price for that is you're gonna be able to get more equity at the end, and you won't have to pay back, right? Everything's all yours. But to some individuals, this helps a lot because they it it's difficult. It could be a challenge to save up to 20%, and that 20% is based off of the purchase price of the home. It's not 20% of your savings, not a concrete number. It's 20%.
Correct.
So it can be a lot for some
Yeah.
people. So this is a great program for that. And I just feel like it's it's not gonna be available for a long time because like
Yeah.
whenever we see other programs out, that come out that's really good, it's it always like gets taken away or something changes on it. I mean, hopefully on the 27th, we could give another update,
Yeah.
on what the terms really are. If you do have to pay interest as part of the 20% equity, all of that back. We'll know more on the 27th, but then for right now, it sounds very promising.
It does.
It
And
it is
and the
very
thing is,
good.
Chia, I think we may actually have to redo this one for the next time too, because from what the audience I'm getting on my phone and everything like that, we're completely frozen. They didn't get a chance to see a lot of that. I'm not sure if it was across the board, but
Is
some
that
of
what it
our
is? Because
yeah.
I'm looking at the live stream. It's saying that the stream is healthy.
Oh, that's crazy.
Yeah, we're gonna have
Okay,
to.
well, we'll see what the audience says next time. I was like, you guys want to see it again? I'm more than happy to share it again because I think it is a really, really powerful thing to know, guys. Not all lenders have this program or is certified to do down payment assistance programs, and because Chi and I, our hearts are always with first time buyers and first time buyers, just like myself. Once upon a time, a little assistance definitely goes a really, really long way. So I'm hoping that these programs will be in place. And again, it's not a unicorn loan, you guys. To have a much higher income, buy a higher purchase price and everything. Okay. And hopefully that'll come in. The only other thing that I would say is because this program is brand new and every single program, there's always quirks that they don't know how to work through until they get a first couple of deals coming in. So with CalHFA, not only does the lender have to do their own underwriting, they have to submit it to CalHFA for them to do their due diligence as well. And because it's very new, it's inundated. If you call in right now, my goodness, guys, prepare for a 45 to an hour and a half wait because that was me. And most of the time when I was calling in, it was exactly like calling into the IRS, in where I was like, hey, we're not available at this time. Call back tomorrow. Call back later. Call back later.
People just have your lender or agent call for you.
Yeah, yeah, it's
Because you're not gonna know what questions to ask anyways. But if for some reason on the live stream it's pausing because we're utilizing a new software today, I'll just re-edit all of this because I do have the recordings.
awesome.
Yeah, and then we'll do that. But okay, was there anything else you wanted to talk about, Lisa?
No, that was it. I think these updates are really, really good, you guys. I mean, unfortunately, the interest rates are rising and they're continue to rise. The Fed's already announced that on the next meeting, they're going to expect another 0.5% hike. So if you're seeing at 7%
Mm,
today, it can go up to 7.5%. And they already talked about moving it up again 5 times this year. Okay. But sometimes they say things, it may not always happen, but
yeah,
it seems pretty consistent since last year to now. Every time they a hike up. That's what had happened. Now, the last Fed meeting, just so that you guys know, the day after they met, that Thursday, was the one time it went back down to 5.875, and then after that, it's done. So
that week
when
I got so many people calling me.
yeah, yeah, one day. But if you haven't
Remember,
secured a house,
I'm glad you brought that up because it just
yeah,
reminded me. People, when the rates are low and you jump on it right now, it's not going to do you any good. Here's why. You can't lock in your rate until you find a home that you submit an offer on and it gets accepted, especially if you're FHA, because they need to come up with a case number attached to that address so that they can start your loan file to lock in the rate. And even if
yeah.
your offer gets accepted today, you can't lock it into how long after, Lisa?
Well, it depends on how fast your operation team is and everything like that. So, say for
On
instance,
average.
right, guys. I mean, it's usually at least, at the very least, 1 day to 3 days. Okay. Now, the mortgage bond rate is the same as the stock market. Okay. There's a limited time. It's Monday through Friday. And usually lenders can lock rate before 3 o'clock. That's the cutoff. I usually tell people 150. Don't wait for the very, very last minute. And that's the thing too. When we send charts to you, it's like, hey, I think you should not, just like if you're watching the stock market, if you don't press that button buy now, 10 minutes from now, that can absolutely change. And it has been. It has been. So get everything ready. Okay. Talk to your people and everything like that. Get everything ready so that when that time does come, all of your paperwork, everything is ready to go.
Mhm.
And that makes it a lot faster too. That 1 to 3 day too, guys, just keep in mind, if your lender hasn't asked you for all of this stuff, if you're going online to online shopping and they're like, hey, they're super easy to work with because they didn't ask for anything. At the end of the day, all lenders have to abide by the guideline. That is
Yeah.
the law. We cannot skirt that. Okay. So if they haven't collected that and they're trying to submit, now they're scrambling, asking you to get that. That 1 to 3 day may delay even further.
Yep. Yeah, and the reason I brought it up, people, is because you have to understand the process of buying a home, and that is part of the process. So don't
Yeah.
pay attention to the rates going up and down every day because it's gonna go up and down every second,
Yeah.
depending on when you lock it in. That's why you gotta have a good lender, you know, hint hint Lisa, to know and study the rates and tell you, hey, look, let's not lock it in today. I feel like in a couple of days is better, or next week is better. Like we've had incidents where some clients feel, oh, we should lock it in today, and then Lisa's like, no, let's wait till next week, and it ends up working out.
Yeah.
So you gotta have somebody that you trust. Again, I'm going back to that again because it's so important. You gotta have somebody that knows what they're doing and that you trust, so that way they can guide you on what to lock, when to lock.
Now, guys, I mean, not all lenders have that crystal ball. Okay. I've been really, really
Hmm.
blessed and very cautious, guys. At rates or you're looking at the stock market, you got to take a look at the whole picture, the entire economy, what's going on, what needs to be curbed in order to move the needle up or down. I'm not always right, but I've been pretty darn blessed that I would say about 90% of the time I'm able to get that mark pretty
Hmm.
darn close enough. And the people that didn't listen to me, I did have one person that didn't, and I was like, man, I wish I went with my gut instinct, but I have to do what you want to. Your lenders have to do what you want. So we're giving you these tidbits so that you yourself can do your own homework and understand that, okay, well, if the country is bleeding money here, they're taking money somewhere else. And right now, because homeowner is still guys that chart earlier, even at 7.375, you're still banking money. Even at 7%, you're still earning money. You know?
Exactly. All right. Well, that's all we got for you guys. I am glad we were able to come back and give you guys a market update and tell you guys about all the availability of these changes to the market. Hopefully, this is a trend. And hopefully, more inventory comes, prices adjust, rates adjust, and we see more of you guys out there. And Did you have anything else to add, Lisa? If not,
No, I hope that was helpful to for everyone that hopefully could hear that and everything. But again, if you have any other questions, reach out to Chia and I. We're more than happy to help.
yep. But other than that, then we're gonna close it out. We're gonna
Okay.
let y'all enjoy y'all rest of the weekend. Peace out. Have a good night.